We know that food prices has been of key concern, not just for Canadians, but the government also took a number of the grocery stores to task and called for an industry-led solution to help tackle these higher prices. Though some of it was out of the grocers' control, there were things, particularly within the supply chain, that were asked to be looked at. And then there was this grocery code of conduct that was essentially created, and there were questions about whether we're going to see these major grocers sign on to it. Moments ago, Loblaw announcing support for Canada's grocery code of conduct, noting that the company made that announcement at its supplier summit with 1,300 suppliers. They say it's part of their continued commitment to promote fair and transparent grocery industry in Canada. Now, this was something that was, as I mentioned, really kickstarted by the federal government. Well, I guess that maybe isn't fair. You had provincial leaders as part of it as well, the Minister of Agriculture, that had prompted the industry to really take a look at itself and see what you could do around lowering these prices and making sure things don't get out of control. Some of the things that the Grocery Code of Conduct set to do was to not be able to impose unilateral charges on a company to help pay for items like store renovations or e-commerce. Essentially, the goal was to help bring down the cost of food. And this comes at a time when food inflation has been coming down, and maybe the grocery stores need to step it up again when it comes to competition. Certainly, we just got Walmart results, and they have been increasingly increasing their exposure when it comes to share of grocery. That's one part of the reason that we're seeing shares of Walmart surge to record highs. Generally, sales came in above expectations, but it's the fact that they also raised their full-year profit outlook that's bringing comfort to investors, because it means, at least for investors' takeaway, that they see sustainability in the strength. And previously, Walmart had been a little bit more cautious about what they've been seeing. Michael Baker is a managing director and senior analyst covering the consumer industry at D.A. Davidson, and he joins me now. Michael, am I correct in my assessment? In the years that I've listened to Walmart's calls, they are always, yeah, we had a great quarter. We're not sure if it can continue. And this time, the fact that you're getting that boosted outlook, they seem to be more confident in what's going on with the business.
Yeah, you're exactly right. Prior to this quarter, in each of the previous 4 quarters, they'd beaten on the quarter, but then they gave guidance for the subsequent quarter that was a little bit below consensus, striking a note of caution. That's not what happened this morning. They beat in the first quarter, and they gave second quarter guidance that was in line with consensus. So that in and of itself shows their confidence. And then to your point, they raised the full year outlook to be at the higher end, if not even a little bit higher than the previous guidance. It's uncommon for Walmart to do that after just the first quarter, but to your point, again, shows the confidence in the current business trends.
So what's working for them this quarter, or where is that confidence coming from? Is it the type of consumer that's increasingly choosing Walmart?
Yeah, in some ways, everything worked well this quarter. They beat on sales. They beat on profit. They're taking market share. More of that market share gain is coming from higher end customers, customers that they define as $100,000 household incomes or higher. The general merchandise sales were down, but units are up, so it feels like they're taking share there. So really, it worked across the board for them this quarter. The flywheel, as we call it, is really working well. E-commerce was very strong. International was very strong. You name the line item, and it was good this quarter for Walmart.
And now, I guess, comes the hard part. A good quarter, a stock that's at an all-time high, and you got to figure out how much higher can it go based on the results it's telling you it will get. How do you do that math, and how much upside is there left in the shares?
Yeah, we think Walmart is a long-term winner. And as a matter of fact, we have a program here at D.A. Davidson that we call the Best of Breed Bison, where we pick long-term winners over a 3 to 5 year time horizon. And we just put Walmart in that list earlier this week. We think what we're seeing here, and it showed up in the numbers today, are an identifiable moat, competitive advantage, et cetera. So the way that we quantify that is through a DCF analysis. And on that DCF analysis, we get a price target that's at least 15% higher than it is today, if not higher.
When it comes to total sales, Amazon still has a little bit of catching up to do to Walmart, based on estimates, but it is catching up. I guess the point is, speak to how Walmart has competed against Amazon, because certainly they could have been vulnerable here, as many other brick and mortar stores have been.
Yeah, simple answer there. To me, one word answer, and it's convenience. Walmart is competing with Amazon on price, as they always have, but now they're competing on convenience, which means same-day delivery, in-store pickup, curbside pickup. They've added 420 million items on their marketplace. So in fact, Walmart's e-commerce business now is growing a lot faster than Amazon. Now, of course, Amazon is bigger online, but Walmart is growing faster. And of course, Walmart is bigger in the brick and mortar business that Amazon doesn't really have. So it's the omni-channel convenience that Walmart is really leaning into, and we think is working.
Can you extrapolate Walmart's results to your sector? Because there's current concern, right, about the state of the consumer. Sentiment data coming in weaker. Retail sales for April was disappointing. How much do you think that Walmart's success can be an industry success?
A little bit of both. So Walmart is taking share, and we do think they are doing better than most retailers. But what we're seeing in overall retail sales and consumer strength, really to us, is a picture of a soft landing, which is that the consumer is still out spending, but less so than they were in previous years and even previous months. So we're seeing a slow sort of deceleration in growth. In a lot of ways, as strong as Walmart's numbers were, their same-store sales have moderated since 2021 and 2022 and even 2023. So to us, their numbers are somewhat indicative of what we're seeing with the consumer, but Walmart just a little bit better, taking a little bit of market share. Again, to us, all showing a soft landing type scenario.
Target reports next week. It's had a pretty decent year, pretty decent couple of months working its way to a recovery. What do you think the setup is going into the quarter?
Yeah, the key there, as you described it, is working their way to a recovery. So we do think they will comp negative. Remember, they over-index in general merchandise relative to Walmart, and Walmart's general merchandise sales were negative this quarter. So that does suggest that Target's same-store sales will be negative. The key there is going to be, are they able to paint the picture of same-store sales turning positive as soon as this month, really, as soon as May, and certainly into the second quarter and back half of the year. That's the outlook that they gave. If they can endorse that and investors get the idea that the same-store sales are going to flip back to positive, we think the setup is pretty good.